Well, good afternoon, everybody. Thank you for joining us for today's Cal Coast Credit Union Financial Wellness webinar. We're truly glad to have you with us. My name is Will Rivera, and I serve as the Manager of Financial Education at Cal Coast Credit Union. I'm grateful for the opportunity to spend this time with you as we explore information and tools designed to support you on your financial journey. Cal Coast Credit Union is proud to be San Diego's longest-serving financial institution. Founded by educators in 1929, our organization has always been rooted in a community first mindset. From the very beginning, our mission has been to empower our members with the knowledge, resources, and support needed to build long-term financial well-being. We deeply appreciate the trust placed in us by our members and community partners, and we remain committed to maintaining the strength, stability, and values that have guided CalCoast for nearly a century. And today I'm excited to welcome you to our webinar titled Preparing for a Home Purchase. But before we get started, I wanted to remind everyone that all attendees will remain on mute during the presentation. If you have a question, please type your question in the chat. We will facilitate audience questions at the end. Reminder that this session is being recorded, so you can revisit it later on our YouTube channel, CalCoast CU. So we have some valuable information. Let's get started. I'm thrilled to introduce our esteemed speaker, Taralyn Rose. Taralyn is the Manager of Financial Fitness and Coaching at Cal Coast Credit Union and has been a certified financial coach for 16 years. She's worked one-on-one with credit union members, providing tips, tools, and resources to help them reduce debt, live within their income, improve their credit scores, prepare for home purchases, and reach their financial goals, all free as a free benefit of membership at Cal Coast. She's helped thousands of people become more financially fit. And with that, Taralyn, the floor is yours.
Thank you so much. Yeah, we actually added the planning for your home purchase just a couple of years ago because kind of when I first started buying my home, I had no idea what I was doing. And we wanted to really help our members get prepared to know every stage, what we're looking for as lenders, what the realtors are looking at, how it's going to impact your bottom line, how credit impacts you. So we came up with this program where we will meet with you and take you through each step, provide a lot of resources. We felt like this was a really good a topic to go ahead and do a webinar for you guys. So we are going to talk about all the different stages. I like to start off with talking about, before you buy, if you want to type this into the chat, what are some things that are guiding your decision about buying a home? Because buying a home is a really big decision, especially here in San Diego. I don't know if you guys know, but we are officially the most expensive city in the entire United States. So this is going to be the biggest purchase you're probably ever going to make. And we want you to understand before you get into buying and committing to that type of a purchase, understand why you want to buy property. So if you will type in the chat, what are some reasons why you might want to buy a property here in San Diego, or maybe you're thinking about someplace else? If you don't mind sharing in the chat, hopefully that's open. You guys can type in there. Growing family. Yeah, that's a big reason. Building family. I love it. I love family. I have twin daughters who are 34, and that was a big thing, making sure we had space for them. Security and equity. It's a really great way of building that future. Absolutely. Thank you so much for sharing, you guys, in there. I appreciate it. For us, it was building a family, investment for retirement. San Diego is a beautiful place. Absolutely. I was born here. I can't imagine living anywhere else. I do have a daughter who just moved to New York because she could buy a 3-bedroom house for $249,000. It's crazy. Owning a business, family and friends to visit. Yeah, I love it here in San Diego. Fantastic. Yeah, those are all really good reasons. So good investment, building equity, tax deductions, having a fixed payment, being able to help the next generation. I think that's really important. We talk about generational wealth, building that equity in that home, being able to give that to the next person so they don't have to put all their money towards that. I love that I was able to help my daughter do that. Building strong credit history, customization, paint the walls. I love that one. Good investments. Paint the walls whatever color you want. My daughter's painting her walls this beautiful rose pink. She's so excited by it. Building that equity, enjoying tax deductions, fix your housing cost, especially here in San Diego because rents are only going up, and then building that strong credit history. Those are all really good reasons to understand why you're investing in this purchase. Also, before you buy, we want some things to kind of think about when you're thinking about the payment you're going to make. What is the cost compared to renting? Because, had a great house, a condo that we were living in for a few years. We had it for 5 years and then sold it so that my daughter could move to New York. And now I'm renting, and I know my cost is going up 5% every single year. It's automatically built into my contract. So I want you to understand some of the things that are going into that cost. It's not just the mortgage payment, right? We're looking at the maintenance, insurance, HOA, looking at the rent growth rate in your area, that time horizon. If you think you're going to move in 3 or 4 years, it might not be a good idea to purchase because you need some time for that equity to build. Longer term, if you're going to be longer term, this is a great way. You're going to kind of see that graph that shows you the longer you have, the more expensive renting gets, right? So there's a lot of really great calculators. If you go to NerdWallet, Trulia, calculator.net, Bankrate, they're going to give you some really great visuals, some resources to help you understand that different impact over time on what you want to purchase. So that will be, I'm happy to send this PowerPoint to anybody who wants it. So just email me at the end and it gives you all these tools. Some other things to think about is that property close to school? Like that's another reason why people are moving. They're going to have family and they're moving into an area that has better schools. Poway, traditionally, some of the best schools out there. So kind of looking at close to school, looking at the demand of the area. Like San Diego is very high demand, which does drive the cost up a little bit. Close to my job, so that commute time. I had a manager who moved up to like LA and was driving 2 hours every single day one way. I mean, I could not do that. Even Temecula, that freeway is really horrible. Absolutely, we're happy to email this to anybody who wants to. Just email financialfitness@calcocu.org at the end, and I will be happy to send this to you. Potential growth of the property. And this is all kind of timing. There are times in San Diego where the property values do go down, and maybe to live through 2008 when property values went way down. And we're looking right now, as if you go on to Trulia or some of those resources, you're going to see that some of those property purchase prices are coming down a little bit. They're starting to reduce prices a little bit. So just kind of looking at, is it going up? Is it going down? Long term, typically it does tend to go up. We were really lucky when we bought our condo. We bought it for 225,000 6 years ago, and 5 years later sold for 489,000. It's going down, right? So that was just luck of the draw. We were really purchased at the right time. And then, what can you afford? Is it close to where you can get decreased mobility? If I can't drive, how far am I from any kind of transportation? Again, understanding depreciation, and then things to get that cost of maintenance and repairs. The bigger home you have, the more expenses you're going to have as well, right? So all of those things I want you to think about when you're going. And then we're going to get you into these different, sorry, I went way too fast. Are you ready to buy a home? These are kind of the steps. Know what you can afford. We're going to go over a slide for each one of these. Determine wants and needs, checking your credit reports, getting pre-approved, shopping for your home. That's the fun part. Making the offer, and then investigating everything before you commit. Do that final walkthrough, and then you finally get the keys. So we're really excited to kind of go through some tips, tools in each one's. Are you ready? This is a handout. So this is something that we created. The questions before you buy. Again, happy to send these handouts to anybody who wants them. So it's looking at, do this checkoff list. Do you have a reliable source of income? I don't know if you guys can read that well enough. Have you received this income consistently for the last 2 to 3 years? Because we are going to look at 2 years of tax returns. Do you have a credit score over 700? Honestly, I would rather you wait until you get your score above 750. We'll go over that, why that makes a difference. Have you paid all your debts on time in the past year? Most mortgage lenders do not want to loan $700,000 to you if you have any delinquencies in the past year. So kind of look at your credit report, make sure we've taken care of any of those, and let that time heal if you do have any dings. Do you have the 20% down payment that is going to allow you to avoid the additional cost of private mortgage insurance, which is added to your mortgage if you have a loan that is higher than 80% of the value of that property? So if you can put 20% down, it's going to help save you some money in the long term. Do you have enough saved for the closing costs? So usually 2 to 7% of the purchase price. When we bought our 225,000 condo, it was about $8,000 in closing costs. It is based on the value. So the higher the property value, the higher the closing costs are going to be. Do you have enough saved to cover unexpected expenses? So if you move in and the day after you move in, the garage door breaks, do you have enough money to cover that without going into debt, going to Home Depot to get the new washer and dryer or the refrigerator, right? So making sure we have that cushion, that you're not taking every penny that you have and throwing it towards the down payment and having nothing left over as a resource, as a foundation. Will you be closer or farther from family and friends, especially if you are looking at moving because of family? If you've got children, my mom moved to Montana, so she's not here to help support me if I needed it when I was raising my twin daughters. If I'm moving away, like that would be a really good reason, is looking at who is around you and the resources you have for childcare if you are moving to take care of your family. Does location you can afford affect your commute? Taking in those added costs. Can you afford your mortgage payment with all other bills and expenses? We have a couple of calculators I will share with you. And then, do you anticipate any major life changes within the next 3 to 5 years? Getting married, expanding your family, having more kids, changing jobs, going to school. Like, what are things that are going to impact that location? Because if you graduate from school and you find a job that's across the country, is buying right now the best idea for you, right? So additional questions, why are you buying? What are your must-haves, nice-to-haves? What will cost look like if you don't buy a home right now? These are really great things to look at before you go in and make that purchase, right? Okay, so again, happy to send that to you guys. So knowing what you can afford, there's a lot of pieces that go into it. You don't want to get deep into debt the day after you move in, right? You want to be prepared for when those things break. So we're going to look at the cost of moving, right? We're moving from maybe the place we're renting, or we have a storage unit and we have to pay for that move, pay for the cleaning, pay for anything that needs to get done, right? So incorporate that before you do it. And then so we're going to look at all the cost, the cost of moving, the cost of maintenance and repairs. I have another really great tool that kind of think about all the different appliances, all the different things in the home that need to be replaced at some point, including the garage, the backyard, the home, the windows, the roof, the floors. These are all normal expenses of owning a home. So if I take a look at my refrigerator, and say we paid $1,000 for it, and I need to buy it in 5 years, it's going to tell me I have an annual cost of $200 that I need to plan for. And so I'm going to fill this out and take this bottom number and divide that by 12. That is part of that cost of owning the home. So I want you to be prepared for anything in the home that needs to be replaced, so that you're not relying on Home Depot credit cards that do 0% for 12 months and then we never pay it off in 12 months and then it's 33% interest, right? So have that available to really think about. The other thing that you are wanting to think about is my favorite slide of everything that we do is this periodic expense calculator. And once you complete that home equity, we actually plan about $5,000 a year for minimum for homeowners. We also have these other expenses that are also normal. So my DMV is $240, is due in October. Divide that by 12 months. I have $20 a month of my money that's already spent, right? I've got my Costco membership. I've got Amazon Prime. I will be happy to email these to anybody who wants it. Just email financialfitness@calcocu.org. I paid about $50 for my tax return. I pay my auto insurance. So I have $134 a month of my money that's already spent, right? So I have a savings account for this that I set money aside every paycheck. Then we go down to the home expenses, $417 a month that you need to incorporate into what you can afford to make sure that I can take care of things. For each car, this calculator is going to help you. My oil changes are $75. I do it 3 times a year. Maybe yours are $100 and you do it 4 times a year. This number is going to flood automatically here to show you what that breaks down into a monthly amount. Yes, Ms. Lincoln, that is the correct calcos.org. Thank you. Sorry. Thank you for clarifying. Fun concerts, events, San Diego County Fair, clothing, shoes, socks for everybody, gifts and holidays. There's a really cool tool on here that you fill out. Here's an example of how you complete that. $2,700. If I go back to here, my gifts and holidays, I put $2,700. That's $225, right? It's pretty amazing how this is my favorite part of what we do. But you're going to get this monthly cost. Most people spend $10,000 minimum. If you're a homeowner, we're talking about $15,000 a year minimum that you need to incorporate into your plan. I think that's a huge part. Um, Let me go ahead and type this in here. Financial fitness at I cannot type. calhostcu.org. There we go. Okay. Then we're going to talk about lifestyle choices. Think about where you live, where you work. Think about how comfortable are you driving? What kind of car do you have? Is that gas going to affect the impact? What do you like to do for fun? Are you moving away from the central San Diego where all the stuff is? And then we're looking at the principal, interest, taxes, and insurance, that PTI. Those are the four core components of your payment, including that loan repayment, the principal, the interest that you're paying for the privilege of borrowing that money, the property taxes, and the homeowner's insurance, right? So these are all parts of that payment. And be aware that some of these go up, right? HOA, those I'm seeing 500, 600. I just looked at one that was $1,300 a month. That's part of that calculation, right? And then if you're a homeowner, so what are some things as a homeowner that maybe somebody might be surprised of? If you have a really big yard, what do you got to worry about? Like the water bill is going to be huge. If you are living inland and it gets really 113 degrees, you're going to have a high bill for that air, right? Or you get somewhere where it's really cold and you have to worry in the winter about the heating bill. These are all things that you got to take into consideration before you can purchase. So that's what you can afford. Then we go to what you can afford according to us, right? We want to make sure that you're not overextending yourself. So we're going to make sure that you can afford this loan that we're going to give you and that we're not going to send you spiraling deep into this debt dump, right? So we're looking at some of these ratios. I'm sure you guys have heard DTI, PTI, PITI, all these different acronyms. So debt to income ratio, that's one of the top things that we look at. And what we're doing here is the total monthly debt payments that you have right now. Then we add that mortgage payment into it, and we're going to divide that by your gross monthly income. And we'd like to see that less than 40 to 45%. That's kind of the average. And if you go higher than that, typically what we've seen is people start putting all those expenses on credit cards, and now they have higher monthly payments, and now they're higher than 50 and 60, and they end up filing bankruptcy. So we like to keep that less than 40 to 45%. Of course, if you're a millionaire or a billionaire, right, we have a little more leeway on that one, but most of us are not millionaires or billionaires. So this is what we're looking for. The other ratio, PTI, that's the payment of that mortgage itself. This is called that front end ratio. And this is housing expenses are just the PTI does not exceed 28 to 35%. So instead of your total debt, we're looking at just that mortgage payment. And again, it's the same thing. Now, maybe some of you have heard Dave Ramsey. He likes to see this at 25%. And that's really hard to do in California, right? Some other alternative rules of thumb, again, that Dave Ramsey, because he wants to like, okay, if you want to take the kids to Disneyland or put money into your retirement, if you have these really high debt to income and payment to income ratios, that doesn't leave you a lot of money left over to do anything else, right? You're going to sit in your room, just watch the world go by. So you don't want to be, we call it house heavy and have nothing left over to live on. The other one is a common rule is that your total home price should not exceed 2 to 3 times your annual household income. Again, as a single mom, there's no way I'm buying here in San Diego because I can't afford it. Maybe in 5 years, we'll see. I don't know, but that's kind of some things to look at. And the other things that we're looking at as lenders is, can you still make payments? And this is why Dave Ramsey likes the 25%. Can you still make payments if the rates rise? If you have an adjustable rate mortgage after 5 or 7 years, that rate might go up and your payment might go up. Taxes could increase. Typically, they do every year. So that's going to increase your payment. And maybe your home insurance goes up. Again, that's typically going up every year. And maybe the HOA wants more. Maybe there's some special thing they want to take care of, like roofs or something. And they might charge you more for the HOA. So we want to make sure that your income can absorb any extra costs if those payments go up. Okay, now we're on to step number 3. Determine your wants and needs, right? So start with the basics. How many rooms do you need? You've got 2 kids. Do you want 2 rooms? What locations do you want to be in? Do you need good schools? Do you know the crime rate in that area? Do you need space for everyone to spread out? Do you need a dedicated office space? Do you need a yard with a fenced area so your kids can play, right? So we're going to look at all that one. Once you've applied those parameters, it's time to go in. Do you need a formal living space? Do you want to be waterfront, beachfront? Wouldn't that be nice? What kind of finishes do you want? So look at the wants, the needs, and write down your wish list. What would you love to have? And then what would be nice to have? And I do have another handout on the needs versus wants. I actually got this from Eaton Realty. Again, happy to share this with you guys. Kind of goes over some of these basic questions that you have. The want, don't care, don't want, need, and that importance to you from 1 to 10, right? So kind of pick out your top 10 things that you want to look at. Um, Happy to have, I think that's a really great way for you to kind of go in, right? So the other you got to think about is maybe it doesn't fit all of your parameters while you're looking. Is there things that you can do? If you have a low enough cost, can you remodel? Can you add that second bathroom in there for less than if you were to rent, right? So how are you going to live in the home? Smart, can you make any adjustments? After weighing all these factors, writing things down, hopefully you have a little bit of clarity in what you want to purchase. And then we can go, here's some examples. Do you have pets, need a yard, upkeep, garage, all the different questions. Again, happy to send that list to you guys. Number 4, before you make an offer, before you start looking, I want you to know your credit scores, and I want your credit scores to be above 750. So 3 main credit bureaus, TransUnion, Equifax, and Experian. You go to Credit Karma, gives you TransUnion and Equifax, and go to Experian, gives you Experian. Now, those are not the scores that we would pull because we use different scoring systems than what you're going to see for free on those websites. However, it's a really great way to see where you're at generally. And I want to get all 3 of your scores above 750 because what we do as mortgage lenders, we pull all 3 credit bureaus. We throw out the top and the bottom, and we use that middle score to determine the rate that you're going to get, okay? So I want to show you why this matters. I'm going to click on this link that will take you to this calculator. So say you're going to buy a home for $750,000. This shows you the breakdown. So the range of 620 to 780 and the difference in the rate, 6.51 to 7.24. A score over 780 is going to save you $366 per month. So again, this handout's going to have that link for you guys. And this shows that breakdown, saving you $131,000 over the lifetime of that loan. Now, in the chat, what are some things that you would like to do with $131,000 rather than pay interest, right? Would you rather spend your vacation? Sarah, you're after my own heart. I am all about vacation. I want to go zip lining with the howler monkeys. I want to go, go to Italy. I want to go all these things. I love it. So thank you so much. If you do not have a score above 750, you can come in to see our financial fitness team and schedule a free one-on-one credit review. We will give you personalized recommendations. I've had scores go up 90 points in 9 days. I would go up 169 points in 60 days. We are very, very good at building that credit score. So get your free appointment. If you go to our website, I'll show you where to go on that one. Get that appointment scheduled before you buy because it's saving you so much money. Please don't go until you're ready, right? Okay. We've got all this done. We've checked off all those steps. Time to get pre-approved. The documents that we need in order to get you pre-approved. So 2 years of tax returns and W-2s for wage earners. Actually, so one of the things I forgot to share with you guys is my debt to income ratio calculator that kind of helps you do all the math for you. So you plug in your gross income here, plug in the payments here, the total insurance, the any debts you have, auto loan payments. That will help you understand your debt to income ratio. And there's notes on the second tab of the income that we need for each type of income that you have. So if you have a second job, if you're self-employed, if you have rental income, all these different things, these are the things that we need, the requirements that we need to actually do that pre-approval. We'll look at 2 months of pay stubs, 2 months of bank statements, asset statements. If you have a large deposit, we are going to paper trail it. So we need to know if it's a gift for a deposit is from a family member. We're going to look at all of that stuff. Okay. So we're going to get all that documentation before you get pre-approved. And we do recommend you get pre-approved before you go out to any mortgage brokers because they'll just send it out to everybody and you're going to lose some points for each one, right? So the main types of home loans that we're talking about are fixed rate and adjustable rates. Uh, FHA, so I'm not a real estate agent and I'm not, so we have a question about FHA loans. This is really just about, we're just talking about the basics. So I'm not going to have a lot of details about that one, America, but I can send you some information on that from our real estate department once I get a hold of them. Fixed rate adjustable rates, fixed rate, the interest rate stays fixed for the life of the loan, usually a 30-year term. And adjustable rates it's typically a fixed rate for a set period of time, usually 5 or 7 years. After that 5 or 7 years, it can go up or down depending on what the margin, the index is. So the index, the market rate is the index is the economic benchmark, change with market conditions. So we're looking at the other things that we're looking at is the margin, which is what we're adding to that, the profit cost and the risk premium. We might charge you a higher margin if you have a lower credit score, right? So we're looking at those things and how that's going to impact that score. So if you have an adjustable rate mortgage, maybe it's fixed for 5 years. And then after 5 years, you have a cap of 1%. That rate could go up to 6%. If the index is 4%, your margin is 3. After 5 years, your new interest rate would be 7%. So it can adjust. There's usually caps that they are only going to limit maybe 1% per year, or maybe it's 1% every 5 years. Whatever that contract is that you signed, that is going to affect how that rate goes. So in the chat, what would be the benefit of an adjustable rate loan? You kind of think about, okay, the rate could go up, and usually things go up. Why would someone take advantage of an adjustable rate loan? Why? And that this is something that we did for our condo. When we did that with my daughter, we did a 5-year adjustable rate loan. After 5 years, the rate went up. So why would someone want to do a rate when that could change? So in the chat, why do you think someone would take an adjustable rate loan? What would be the benefit of that? Anybody done an adjustable rate mortgage before? Maybe the interest will go down. Wouldn't that be nice? Yeah. And when we're seeing income fluctuations, yeah. I mean, you get a lower payment up front, right? Typically, they're a little bit lower interest rates. So, and it's fixed for 5 to 7 years. So I at least have that time frame. Maybe that gives me time to grow my income at work. And I can afford any of that rates low at first, right, Larry? Exactly. So all those lower initial rate, income fluctuations, interest rate going down, those are all reasons why someone might do it. The con is that their rates might go up. And maybe in 2008, when all of the values of those homes went down, people were not able to refinance out of an adjustable rate mortgage. They were stuck. And the rates were going up. So that's something to kind of think about and how that impacts you. Now we've got all this information done. We're going to go shopping, and we're going to I like using Trulia and Zillow just to kind of look at areas, Realtor, Redfin, lots of different options. You can do some searching, and you can do this on your own. You can go to open houses. I like doing that so you can kind of get a feel for the neighborhood, get a feel for the space, do a walkthrough, look at the backyard, just kind of see what's in that area, like the condos I'm living in right now. I would absolutely buy in that area. I'm absolutely delighted where I am living right now. I would absolutely buy in that area. Where I was before, I would not want to buy it now. It was $489,000. I would never pay that much for that house. So getting a realtor, this is something that, people are like, oh, you don't really need one. And we didn't do that when we bought the condo because we were buying it from the person we've been renting from for 10 years. So there are specialized situations, but having a realtor is very helpful. You might have to talk to several realtors. The first time we ever bought a home, the first guy that we had, like, didn't give me any eye contact at all. We changed realtors because he was just not listening to me, was not taking us to look at properties that fit our parameters. I had twin daughters at the time who were 5 years old, and I didn't want a yard that was right next to the freeway. There was things that I did not want, and he kept taking us to properties. I'm like, you know what? This is not the right guy for us, right? We want someone who's listening to you, but they can help set up that customized search. They can look at do all that research for you. They will take you out to view the homes. They're going to help educate you on every step of the process, which again, most of us, that's not our area of expertise, right? So they're going to help you keep all the meetings, make all the phone calls, keep abreast of changes, make the offers, and they represent you throughout that process. Now, we actually have a CalCoast Home Rewards. So if you guys haven't been to our website before, I had it open up here somewhere. I'll have to go back to it. If you go to calcoast.org, go to mortgages, you're going to see in the bottom left, there's a home loan. We can actually have a service, the CalCoast Home Rewards. You buy the home using their service, you'll get a 20% commission rebate, which is kind of cool. You'll get access to the most up-to-date listings in Southern California. You'll get personalized real-time alerts on new home listings, and you're going to have a trusted local real estate agent working for you. Also, if you're selling, maybe you have to do that to buy the home, you can sell your home with a flat 1.5% listing fee, which can save you some money there too. Will has put that information in there for you. Awesome. Thank you so much, Will. Number 7, making an offer. This is the exciting part, right? Now you have this checkoff list and you know the wants, the needs, the things you have to have, things you'd like to have. If you find a home that matches 7 to 8 items on your checklist, go in and make an offer, right? You don't have to take it. This is like that first step, but keep looking. That's probably a really good one. You probably should make an offer on that one. Things are going fast in San Diego. The realtor can help you recommend an offer price, but you do make the final decision on what you're going to offer. Your offer is typically going to include that proof of down payment funds, include any pre-approvals you have. And my favorite part is a letter of introduction. So here you're going to include information that may make your offer stand out. It's a chance for you to talk kind of directly to the seller. Why do you love this home? Why should they sell the home to you rather than any of the other 50 different people who are making an offer on that home? I've seen different situations where that letter of introduction, I'm a single home. I fell in love with your place. I've got 2 daughters. I want to raise them here. This is a great location. I see myself, building a wonderful family here. And that might set that apart from somebody else who is just, those people who are out there buying the home so they can flip it and sell it or rent it out again, right? So that's some information that can actually make a difference in that offer. So you're going to make that offer, do that letter of introduction, make sure that's included, and the realtor can help you with that. Okay, before you finalize everything, we want to do a general home inspection. There is a cost, usually $300 to $500. The size of that home is going to affect that. You might have some additional inspections, electrical, plumbing, foundation that might come up with this. Make sure you're doing that step so there's any things that you didn't see that can come up out of that inspection. Reading the disclosures. So when you are reading the real estate disclosures, you want to look for some really important, they're called material facts. So these are known defects, known conditions that are negatively going to impact that value, safety, or livability. You're looking at structural issues, water damage, unpermitted work that does happen. I've seen it happen. Any porches that are built that didn't have a permit for it. Any environmental hazards. So you're looking at the seller's disclosure, the natural hazard disclosure, any inspection reports. You're going to look at every single line on those disclosures to make sure you know what you're getting, right? Some other things you're looking at are contingencies, right? That means that the sellers accepted the offer, but they have to meet all these different specific conditions, such as the inspection, the appraisal, the financing, all those things these are under contract but not yet sold. So the deal could still fall through if any of these contingencies aren't met. Each contingency is an option for you to cancel, but if after a certain point, you remove those contingencies and then fail to close escrow, you could potentially lose deposits. So just be aware there is an opportunity that you could make a deposit and not meet a contingency, and you could lose your deposit. So just be aware, right? So if a contingency is not met, make sure that your agent sends a formal cancellation request to get funds returned if you can. It is a formal written process, right? The buyer's waiving contract conditions, signaling that they've been met. You can proceed with the purchase. It makes the deposit non-refundable if the buyer walks away. So in California, real estate contingencies must be removed in writing and signed by the buyer to be effective. Okay, final walkthrough. This is a 30-minute to 1 hour inspection conducted 24 to 48 hours before closing to ensure the home is in agreed upon condition. All repairs are completed per those contingencies and no new damage has occurred, right? So I have a great checkoff list for this. Let me go back to this one. I had it open. Close that one. Where did it go? I have way too many things open for you guys here. Home expenses list. I have a home inspection. Oh, I can't find it. I do have a handout that will go over. Maybe it's here. Look at the hand worksheets here. Nope, that's the ones where it needs. I do have a checklist for you guys that I can send to you. Um, but what we're looking at is you're verifying that all the repairs that were part of the contingencies are done, right? You're going to look for any potential new damages. Maybe while they were doing some work, they damaged the walls, look for holes. You're going to go through and you're going to test everything. You're going to test the appliances, the lights, you're going to run the water. Even if it's 113 degrees outside, start the heater. If it's really cold, start the air conditioning. We're going to make sure that everything is working, right? Check for the inclusions, exclusions. This is everything that was supposed to stay in the home, which is usually outlined in the contract. Like they're going to leave the refrigerator, they're going to leave the microwave, they're going to leave, the backyard patio, and then anything that's not supposed to be there is gone, right? So they left some couch in the living room, and just like get that thing gone, right? So we're verifying that those inclusions and exclusions are completed, and then verifying that the home is broom clean per the seller's agreement, that all trash personal items are removed. And then you get the keys and you are a homeowner and your grant deed is recorded and it's all done. So it's really exciting when that happens. A couple of home buying myths that we've seen out there that did not work, did it? Back up here. Myth, I need 20% down to buy a house. There are a lot of opportunities out there. You can put as little as 0% down. You still typically have to pay the closing costs. Like I said, our 225 condo was $8,700 in closing costs. The myth, I only need the internet, right? So there are a lot of steps. I think we've shared some of them, but there's even more. Not a home buyer, expert, but a realtor can guide you through all those different steps and represent your best interest. There's only one perfect house. If you're really ready to buy, there's always more than one option. So stay objective about what you want. Know what you can afford and don't spend more because you're so excited about this home, right? Don't dig yourself into a hole because you're really excited about a home. Stick to those numbers that you have. All right, so you have all the tools to get you ready. There are some other tools we have to share. So calcoc.org /enrich is a financial wellness platform. You don't even have to be a member of CalCoast. Go and click on that link or scan that QR code. It will take you to that website, and then you can create your money personality profile, get some more articles on home buying. Go to our YouTube page where I'm going to record this and put this on our YouTube page at the end. And if you would like to schedule your own home purchase assessment, where we go over the DTI, the PTI, the home expenses, we help you create that periodic expense calculator. We'll do all that work with you to find out really how much of a home you can afford. We'll kind of back calculate what you can afford. You can click on that link or scan the QR code, go to our website, and you can actually set a one-on-one meeting with us for the home purchase. Also do that credit review if you want to get ready for that. We like to get that going quickly. So any questions about anything we talked about today? Any of the slides?
Taralyn, thank you so much. That was a lot of great information. I just want to remind everybody that if you have a question, put it in the chat. Taralyn is here right now in real time that can answer those questions for you. So if you have a
Some of
question,
them.
please put them in the chat.
Yeah, this is all about the numbers, right? What you can afford, what makes you happy. It's like when I bought my car. Like the only thing I needed two things. I needed heated seats and I needed to have a plug-in hybrid. That was the only two things. Everything else, I didn't care about the color. I didn't care like you just kind of go and know what's important and then everything else kind of falls into place.
Uh, Question, who do we talk to about improving credit scores?
If you go, let me actually clear this off. If you go to our public website, let me get into that screen, close all this stuff out, and go in and show you where to go. It's really, really easy. So CalCoast CU, go to About Us under Financial Coaching, and that's going to drive down to the credit review here, and that will take you to our Calendly scheduling system. And just going to show you what times and dates we have available in blue. You click on that day, and it's going to show you what times we have available. It's 1 hour, and we'll tell you everything you need to give you personalized recommendations. It's a really cool service. And that mortgage thing we're talking about is if you go to mortgages and go to the rewards, that's going to take you to our home buying service that we offer. Um, can I use Calcus to buy a home in Ohio? I'm sorry, but no, we don't. But we can get you all the tools that you need before you get there. Unfortunately, we only do in California. If I walk into a physical location, will I be able to meet with someone then and there to create a home buying financial plan? No. So the financial fitness coaches we do mostly Zoom. We do have a couple of in-person. I'm the only coach right now that does this. So I meet with members out of our Kearney Mesa Innovation branch that's in Kearney Mesa. So, and I'm booking like in July at the moment. But just walking into physical, you can talk to someone about applying for the loan, but actually creating that home buying plan where you're running through all the debt ratios, running through the home expenses and the cash flow, that's something that financial fitness does. And we do that all via Zoom. So the first meeting typically for that is about an hour and a half long. We'll schedule another meeting 2 hours after that to kind of fine tune some of those ratios and help you. Does Calcoast assist with closing costs? Um, Not that I know of. Will it?
I think we have some programs that we do cover some closing costs. So if you want to go to our website and ask to talk to somebody, they can kind of go over with you different programs. But there's also a calculator in there when you can put in how much you want to purchase price, how much you want to borrow, and the different programs with um, you cover the closing costs or Calcoast cover the closing costs. So those we do have some of those programs. I would highly recommend going to our website. And then if you want to speak to somebody, there's a contact me link right there that you can talk to somebody or they can contact you about that. Anybody have any other questions for Taralyn? Taralyn, can you talk about, and I'm not sure if you have the answer to this, someone who's self-employed versus a W-2 person, what's the difference or qualifying?
Yeah, so this actually comes up quite a bit when we're looking at, so in the debt to income calculator, there's the notes regarding gross income. Self-employed, we look at 2 years of tax returns. We look at the profit or loss statement and we look at your 1099 miscellaneous income. And we're going to use that plus your bank statements to verify that income. Um, so this is one of those things like if you have a job like maybe 2 years, a year ago, you weren't earning so much and now you're earning great, like I'm ready to buy a home, we're going to take 2 years of information. So this is something you kind of have to be really careful when you are filing your taxes when you're self-employed because we know, so here's the thing, we know that you're trying to take all the tax deductions and all the credits and pay the least amount of taxes that you can. But what you claim as income to the IRS is what we have to use as your net income when we're doing these calculations. So you have to balance what you are reducing your net income, your total taxable income by, and make sure you still have enough that you can afford to buy a car, afford to buy a house, afford to pay all those other things and keep those DTI ratios within range. So if you make $200,000 and you take every single credit and deduction you can, you say, oh, I only make 50,000, that 50,000 is what we have to use in our calculations. So you do have to balance that out. And sometimes that kind of delays how quickly you can get ready to buy that home because we might have to wait a year for you to adjust what you're claiming in order to, just think about that when you're taking deductions.
Excellent. Thank you very much.
Why is the question how much you want to apply versus this is how much you qualify? How much you want to apply, how much you qualify. Okay. Um, if I'm understanding that, how much you want to apply for versus how much you qualify. So are you talking about how much you want to borrow versus how much you qualify for? Is that the question? I'm sorry, Nancy, I just want to clarify that a little bit. Okay, so how much you want to apply for? You might want to borrow $1 million to buy a home, right? But if we take a look at your DTI and your PTI and all the other things, you're only going to qualify for $600,000, right? So that's something that we're looking into is what you can afford according to the lender. So we went through all the different things that lenders are looking at. Um, you might have to come up with enough money down in order to get that loan amount down to where you can afford it according to our ratios. Does that answer that question? That might affect how much of a down payment you need. Okay. Are they California specific first time home buyer benefits? We actually have a lot of first time borrower, like we only had to pay closing costs when my score is over 700. That's one of the cool things about California Coast. There's also, I refer people a lot to HUD because they have a lot of first time borrow programs that can help you with the down payment. They can help you with closing costs. They can help you. So if you go to HUD and look at first time borrow programs, I would recommend going there. They do have a lot of programs out there to help. I love this. I love all the
Yeah.
questions.
Yeah, and if you would like to have a mortgage representative give you a call, please email me directly. I put my email in the chat, and I can have someone reach out to you and kind of go over what you're looking for, process, rates, and answer any questions that you have.
Yeah, that's more detailed, but the real estate department does. I just help you get ready for it. They're going to help you through all the different steps.
Hmm.
Thanks, Will.
Absolutely.
Yeah, so that's where if you go to our website, go to mortgages and go to the rewards, that there this service can help you with buying and selling. So just enroll now and you'll have someone be able to call you.
And just want to say we truly appreciate you taking the time out of your busy day to join us today. Your participation makes these conversations impactful and worthwhile. Taralyn, thank you again very much. I appreciate all the information you give us and everyone that attended today. Until we connect next month, we wish you continued success on your path to financial well-being. We'll see you soon.